Next up, we have Ascot Gold. Derek White, President and CEO, will be speaking. Ascot is focused on restarting the past-producing historic Premier Gold Mine, which was once North America's largest gold mine, located in British Columbia's Golden Triangle. The company's near-term strategic goal is to define a new high-grade resource for underground mining while continuing to explore the nearby targets on its premier Dilworth properties. Please, Derek.
Good morning, and Anthony, I'll be watching the clock. I've seen you sort of have a nervous tick over there a minute ago. I'll try to make this as brief as possible because I appreciate the conference is a little bit behind schedule. We're a little bit new to this part of the world, the Golden Triangle, and we're not explorers. We're really mining guys that build and operate mines, and we've been doing this for quite a period of time. And generally, we've been very successful when we find where somebody else has invested a lot of money and a mine got shut down for the wrong reason. And so we have done well in finding these things and getting them back into production quite quickly. I will be making some forward-looking statements, and you can read that at your leisure. I was involved with exactly the same situation in the copper business in 2004, and a number of us started a company called Quadra FNX Mining, which took over a number of mines and grew from originally a restart of a copper mine in Nevada called Robinson. BHP had put about $500 million into that mine, and we bought it for $14 million. They told us we'd never get it started. Within a year, we had it started, and it was producing about $100 million of cash flow, plus or minus, within about 12 months. And so we were quite happy with that situation, and we built the company from that. We were asked by the shareholders of Ascot back in October if we'd consider coming to Ascot and having a look at it. And we went up and did our own diligence. And when I say we, it's a number of people that worked with me, engineers, metallurgists, and one geologist that had been involved in our time at Quadra. We went up and had a look, and we were quite intrigued. And I'll tell you really quickly why we liked it so much. I'll just move on. So for those of you who don't know the Golden Triangle, it's a beautiful part of the world in northwestern British Columbia. But one of the challenges that it has is it has a lot of mountains and glaciers, not a lot of roads, not a lot of power. And so unfortunately you have some of Mother Nature's great deposits, but they're located in areas where it's very difficult to access them. We're interested in an area that's in the very southern part of the Golden Triangle, and we have a couple advantages. We have power, we have a mill, we have a tailings dam, we have a port, we have a town of Stewart, which is about 10 miles away from where we are. And that makes a big difference. It means that a lot of the things when you're in a greenfield site or in an area where you have to put those things in place, you don't have to do that. And it's one of the reasons why we can drill for such a relatively low cost compared to a lot of people in remote areas. And so this was one of the things that intrigued us about this, is could we utilize this infrastructure? Because unfortunately in the mining situation, and I know a lot of people want to talk about the resources and grade and all the things that make those things work, but unfortunately our business is also very capital intensive. And when you have a big capital build, it becomes very difficult, especially for smaller companies, to finance. Reducing that burden, as long as there's resources economically to support that, makes a big, big difference. And that was one of the things that intrigued us about this. So really our advantages are threefold. There's been 3 mines built on this property, and back in the 1920s, this was North America's largest gold mine. It was the 3rd largest gold mine in BC's history, and they started the mine in about 1918 and ran until the 1960s. There was another mine that was built in the 1930s and ran for a short period of time. And then a company named Westman built an open pit mine in 1988, and that got bought out by a Swedish company named Boliden. And Boliden owned this land for a period of time, and Ascot farmed in and basically took that land over. Boliden is a base metals company that was not really interested in gold, especially in the late 90s when gold prices dropped, so they shut it down and put it on care and maintenance. The other advantage that we have outside of the infrastructure is they have 628,000 meters of drilling in 4 key areas. And Ascot's able to drill between $80 and $100 a meter. Last year, before we joined, they drilled about 120,000 meters of drilling, and they've been doing that every year over the last 5 or 6 years. So we have an enormous drill database. We have opportunities to stage resources relatively quickly and go after a number of exploration targets. As engineers, although we do get excited about the grade and all the other things that go on there, we always sort of look backwards and sort of say, hey, what does this mean economically? And for us, we look at this and say, how much could we feed through that mill? And the mill ran at about 2,800 tons a day. So somewhere between 2,500 and 3,000 tons a day is the maximum the mill can run at. And the minimum it can run at is 1,000 tons a day. So for us, what we're interested is in feeding that mill for 10 years. And to give you some kind of high-level metrics, at 1,000 tons a day, that's 3 million tons of ore. At 3,000 tons a day, that's 10 million tons of ore. So we need to be able to locate high-grade material to feed that mill for 10 years. And since we've joined the company basically in late October, we've really been on that mission. So the very first thing we said we were going to do is we took some of the drill data and we're going to release our first resource in a series of resources at the end of this month. And then we hope to release the second resource at the end of September. And at the same time, we're doing the engineering to restart the mill. And so we're looking a lot at some of these different aspects of how we go about doing that. And then lastly, one of the most important things, if you remember anything about what I say, it's the people. And it's not just the people that work in the company. It's the people of British Columbia, it's the government, it's the Nisga'a Nation, who's the First Nation that has a treaty over this part of the world. It's the people in Stewart. It's all the people that can make that happen. And you need those three ingredients. You obviously need to have a high-grade gold in the ground. If you have a lot of infrastructure, which reduces your capital equation, and you have the people, the mining people, the government, the local community support, the First Nation support, those are things that really make these things a lot easier to do. In a nutshell, and I'll try to be quick, this is an area of about 75 square kilometers, 10 miles north of Stewart. And there's really, of the 628,000 meters of drilling, it took place really in 4 areas. In the Premier Mine, which was the mine that was built in the 1920s, and the open pit mine in the 1990s. And in the Big Missouri Martha Ellen area, where the former Cominco, the predecessor to Cominco, actually built a mine in the 1930s. The rest of the areas have been drilled a little bit, but not a lot. So we've really only explored about 30% of the property, which leaves us a huge amount of opportunity. Our plan, it's relatively simple. We're going into the area where we have drill spacing of 25 meters, and we'll put out the first resource in about the next 3 weeks. We're shooting for 7 to 10 gram material. That's the high grade that we think really can make a lot of money here. And then we've taken we have 8 of our own drills, so we can drill at quite significant rates. The company released a 4.5 million ounce resource in 2014, a lower grade resource in the Big Missouri area. We're going to drill that, and we're doing that right now, to try and go after bringing our second resource of high grade, sort of 7 to 10 gram ton material. And the areas in yellow are areas that we know that there's high grade and there's advanced exploration, and we'll start to infill drill that to prepare that for the third resource that we hope to bring out in 2019. We're just zooming in a little bit on the Premier, the area where we're going to release the first resource. It's a little bit hard to see, but there's a side of a mountain that's kind of coming down, and we have 8 zones that have been colored here that are high grade. There is mineralization between these zones, but it's not good enough grade for underground mining. Generally speaking, we're looking for 5 gram and better material. We have access, so we have a dewatered and ventilated underground, so we can go underground, and we do that through the level 6. And so we have the advantage of, as we build the resource, we can get in underground and underground drill this to put it into mining reserves. We've worked through, as engineers, how we would like to mine this. It's a combination of long hole stope and room and pillar, depending on the orientation of the bodies. But because we have enough drill density, we can quite rapidly get that to come together. We were lucky that Beleeden and Westman, before they left, they slashed out the level 6, which gets it into a place where we can mine and put ore zones down to that area and utilize that infrastructure right away. The other area that we're interested in, the second resource that we're drilling right now, and it's a little bit hard to see, there's also an underground mine here. We haven't gone underground in this area. It's in the Big Missouri area, and we see in the back of a pit that Westman mined from years ago some pretty good grade going into the back of the wall. So we're looking at ramping into this wall and trying to delineate our second resource, and that's one of the things we're working on now. So hopefully by the time we get to the end of September, we should have 2 reasonable resources our mining and restart plan and engineering work completed. And then we'll continue to work with the government and the First Nations into putting this back into production. I'll just make a very brief comment. In the Golden Triangle, and it is a very beautiful place. I mean, it's full. It looks like Switzerland on steroids. It's quite impressive, but it is challenged for infrastructure. You can see Stewart in the bottom of and Hyder, Alaska. We're right on the Alaska, Canadian, British Columbia border, but we have power that comes from Stewart to the mill. But in the mid to around 2008 or 9, a company named Regional Power built a power dam on our property, and their power plant is 500 meters from our mill. They feed power to Pretium's Brucejack mine, and they also sell power back into the grid. So we have the opportunity to take power not only from our own power source from Stewart, but also from a power plant, a run-of-river power plant right beside us. So really, the things that we're looking for in mining is we have an underground mine that's already been developed, which cuts down on our costs of doing underground mine development. We have a 3,000 ton a day mill. We have a tailings facility. We have a water treatment plant, and we have 2 power sources. And we also have a highway, the Grand Duke Highway, that runs basically through our property. The combination of that really helps us on the infrastructure. This is just a picture of the mill. You can see the mountainous kind of terrain that you're facing in the background. It's a picture of the CIL circuit inside the mine, and that's a picture of the tailings dam that all existed back when they mined for 10 years from about 1988 to 1998. This is also just some pictures. You can see the hydro dam just up to the middle of the upper bench. That's the Grand Duke Road that runs along our property, through our property, and then farther north. The Port of Stewart that you can see. So effectively, you see 2 mountains. Alaska is the one with the snow on top. Canada is the one that's green. We just turn the corner, go to about 10 miles north, and we're at our mine. That's one of our 8 drills. So we actually have 8 of our own drills, and that's one of the reasons why we can drill, especially from surface, at quite a high rate. That's the level 6 portal and the water treatment pad in the top left. Ascot also has 2 other assets, and I would be remiss not to talk about them. We have a permitted and ran a mine, an aggregate mine, about 50 kilometers south of Stewart on the Portland Canal, and this was forgotten about. A lot of people in British Columbia were building gravel mines to get ready for LNG plants. Unfortunately, those LNG plants never happened. And what's been happening recently is California, both in Los Angeles and San Francisco, is extremely short of gravel. So in November of this year, there was a company named Polaris Materials, which was sold to U.S. Concrete for $300 million, roughly similar to the size of this mine. And then the fact is that we can put gravel on a ship and send it to California for about $7 a ton, when it costs them about $12 to $13 a ton to truck it about 60 kilometers outside of the urban centers. And really, Ascot hasn't focused on this. It doesn't really... Most of our shareholders are not really interested in it, and as new management, we would really like to divest of this and sell it into a construction company where it really belongs. We generally make about $1 a ton on aggregate, and a concrete company sells concrete for $8 to $1,000 a cubic meter. And so that's an asset that may help finance as we go going forward in building the mine. The other asset that Ascot has is a very large copper deposit in Washington State near the border of Oregon. It was historically mined by the Duval Corporation. It's about 500 million tons of about 0.56. Ascot drilled it in 2012 and found that the grade was about 15% higher, and it had an opportunity to increase that to about 1 billion tons. Washington State, we've permitted and built 2 mines in the United States, and the United States is a little trickier than some countries in terms of permitting. So we see that we know the process will take quite a long time to get this up to an active mine status, and we're looking at some options to potentially put this together with some other copper players, and really focuses Ascot's attention on the gold mine. So our plan really for this year, and we're quite new, we haven't done a lot of marketing, the team's not as familiar with junior mining. We're getting to know some of the different players now. But basically, our plan is to put out the resource in the next 3 weeks, work on the engineering plan to restart that mill, work on the second resource that we hope to release at the end of September, and then start to work on the third resource, which we would hope to release in 2019, and focus on trying to make money in this part of the world and take advantage of the great infrastructure that we've been blessed with. to work a little bit on, obviously, our permitting. We are permitted. We have a mines permit that's been in decommissioning. We have a water treatment plant with an active water treatment plant and an exploration permit. We need to work with the First Nations, with the Nisga'a Nation, and the BC government to do a Mines Act amendment, put that back into active status, and continue to make sure we take care of the environment. And we'll work on finding better homes for Swamp Point and the copper asset. And so, in a very short time, we've made quite a lot of changes in the company. We've changed pretty much the entire management team. I mean, we're a little more engineering focused than probably they were before. And we've also changed a lot of the board. We brought on the former Minister of Mines of British Columbia. We have 3 mining engineers on the board now, and we've tried to change things around. Our company is reasonably well funded. We have about $20 million Canadian, and really the expenditures for 2018 are simple. We're going to spend $6.5 million drilling about 50,000 meters of infill drilling on these resources. We're looking at putting a bond up for the water treatment plant, and then we have some engineering work to do. And then hopefully we'll be in a position to come back to investors to take forward production. At these kind of grades, and we'll have to see how the future works. We're talking about producing, if we get up to the 3,000 tons a day, we're talking about producing somewhere between 200 and 250,000 ounces a year for 10 years. And because of the infrastructure advantages that we have, we would expect our underground mining costs to be pretty low in the sort of $600 to $700 all-in range. So we'll have to see, if that comes true, but we're certainly on the plan to try and make that come true. Thank you very much.